Ladies and gentlemen, this is Krishna Gopal. You know me by now as followers, as my viewers, readers. You know that I am associated with Tech Mahindra, and my mission in life is to make a difference to young professionals and make them into a better version of themselves. As I look back the year 2022, tomorrow is the last day. I thought it's a good idea to take a look at the year, and who better than Sachchidanand Shukla, Dr. Sachchidanand Shukla. In the promotions, we didn't mention anything. We said the chief economist, but he is the chief economist for the Mahindra Group, right? As I am with the Tech Mahindra. And he kindly agreed to come for this short half-an-hour discussion, fireside chat. I already shared the questions with him, but we'll go through the questions one by one and seek his views and take a view on how 2022 has been for us as an economist. That's his view. Now, the first question, Shuklaji, coming up is, overall, the worldwide situation is, grim, right? There's recessions being spoken about. There is firing happening. People are getting fired. At the same time, India seems to be strangely, kind of away from all of this. Strangely. Why do you think so? And any government policy responsible for this?
Thank you so much. And it's an absolute pleasure to be here interacting on the eve of a new year that brings enormous possibilities for the Indian economy and for all of us. And as you rightly mentioned, I think India was the standout economy in 2020. If you had asked me or anybody else who is a keen watcher of the economy or a commentator, nobody would have been able to imagine the kind of performance and the kind of heft the Indian political economy brought to bear at the global level. If you had asked anybody and told anybody that there will be a massive war in Europe, there will be a massive supply chain disruption, crude oil is going to go to 138, food, fuel, all of this will become a problem, I think nobody would have been able to guess the kind of performance the Indian economy or the resilience the Indian economy has shown. So yes, India is, as we speak on the eve of a new year, India is an oasis of hope in a turbulent world. The world in 2022 and 2023 and hereafter is going to need a new growth engine with China slowing, as you know. That was an economy that grew at 10, 11, 12% for 30, 40 years. And 2/3 of the world economy, US, Eurozone, China, all of these slowing, I think it is absolutely the right time for the Indian economy to take up that slack. And we are very, very well positioned via our 3Ds, right? So democracy, digitally savvy demographics, and domestic demand. Now, why is domestic demand so important? Because the world is going to slow down. More than 2/3 of the world is either going to be looking at a recession some point in time in 2023, or there is going to be a slowdown. So barely any growth, right, in any part of the world. And given that sort of a backdrop, if the economy grows at a slower 6%, I think that is still a massive performance for an economy of our size, an economy of our complexity. Now, think about it. Sourcing cheap oil amid war and sanctions, FTAs in this kind of a world when world is shutting shop on global trade, right? And getting Indians evacuated from war zones suddenly out of nowhere, hundreds of thousands of people, and making available food, aid, and as we speak, there is a massive outbreak in China, and it's already spread to several countries as we speak. Now, this is the sort of backdrop, and growing at even 6% from 7, say, in F23 is going to be a significant achievement, and India is going to be the new growth driver for the world. But make no mistake, global slowdown is going to have an impact on the economy. We are going to slow. Demand is going to slow in certain pockets. And yet, I think this outperformance vis-a-vis the rest of the world is something which is unmistakable.
Fantastic. I mean, you strike such a positive note. In fact, just now I was talking to a headhunter, and 4 months back he was so exuberant, and now he's so despondent. So thanks for that, and I'm sure you've got a lot of data behind that, right? So number two, the question that I have is around the China pickle, as I call it, right? I mean, China has gone and created problems on the border, advancing troops. Question number one is, do you think that will distract us? Will our spend on defense go up so significant that we will be distracted on the rest of the stuff? That is question number one. And two corollary questions around China is, do we have a significant opportunity to replace China in the manufacturing space? We are seeing that with the PLI, etc. And how will we alter the balance of trade with China, which is so significantly high in favor of China?
Right. So I'll probably take up the latter half of your questions first and then move on to the earlier bits. So yes, there is this, you can say, God-sent opportunity, maybe serendipity. There is this opportunity for India to really take up the slack, as I started with. But can we replace China in manufacturing? I think we need to look at the question slightly differently. So the way things are, the world is at the cusp of change, right? And we are experiencing major structural and secular changes in terms of geopolitics, in terms of economics, and whichever way you want to look at it, I mean, from the perspective of technology, I think the world is changing significantly. And a lot of this will be evident only a couple of decades later. So we are very, very, say, interestingly poised in terms of geoeconomic or political history. And it is maybe serendipity, it is maybe a little bit of luck that the world is trying to move away from China. The love story that the world has had with the Chinese has soured, and everybody is trying to move away. So therefore, that China plus one. And it has so happened with the war, ongoing war in Ukraine, that the world is also looking at a Euro plus one world, right? So people at large are looking for a country, an economy which can take up slack, which is dependable, and which has what it takes to really replace such a massive growth engine to the world, right? So you look at the last 35 odd years, and China has been a massive growth engine. Can India take up some of that? I'm definitely going to say a resounding yes. Now, how much and in which segments? For example, you asked about manufacturing. I think the question should be, can India really take up the kind of potential that we have in manufacturing and services? So why look at only manufacturing? Let's look at the potential of the Indian economy to be a major growth driver for the world. Let's look at the Indian economy's needs for the next several decades. Can we create enough jobs? Can we have a balanced sort of growth? Can we grow without destroying the ecology, right? Or the environment like China has done? So I think there is a massive opportunity, not just manufacturing, but just to reorient the Indian economy, the way we can grow. Can India's growth be greener? Can India's growth be blue? For example, can we tap the potential that the water bodies that we have, the oceans and the seas, and can we grow in a sustainable manner without destroying the environment? I think the answers to all of these questions is definitely yes. India can rewrite the world economic story in a different color, different hue. It can be greener, bluer, or whichever color you like. But we will not really grow at the expense of the globe or Mother Earth. So I think these are some of the things that we need to ponder. Now, you also asked about the trade deficit. Now, we have about $74 billion trade deficit with China, which is the highest for us vis-a-vis any other country. Now, typically, the way to look at trade deficit is not necessarily the way that hey, imports are higher and therefore everything is very bad. What trade does is it has been the mainstay of global economy. It provides consumers and industry with a wide variety of goods and services that you may not have in the absence of global trade, right? So we need to look at trade or trade balances in the right perspective. So I don't think that using the lens of just a deficit it's a bad thing. I'll give you the example of United States of America. You ask anybody, everybody thinks it is probably the world's biggest and the most robust growth engine or economy, and yet they have constantly run a current account deficit or trade deficits, as we call them, right? One may argue that they have the reserve currency of the world, but that's not the only factor. The point is, it does provide you goods and services that you may not really have otherwise in the absence of trade. Now, there are two things that we need to look at in terms of trade deficit. Can we cut down on imports that are non-strategic, not necessarily required for the growth of the economy or the benefit of the consumer at large? There are several such examples, and the Indian government is trying to do that. I mean, electronics imports, smartphones, do we need so much of those toys and some of the cheap stuff that comes in from China? Definitely not. And the government is trying to address that question via various economic policies or measures. But there are strategic areas where we do need, so for example, the CAPEX story, a lot of the critical components or the Indian industry requires do come from China. And you cannot really cut off suddenly from these important ingredients or inputs to the economy, and that might jeopardize your growth rate or growth story. So I think we need to be more discerning when we look at the question of trade deficit. Can we cut down on areas where we don't really require them, where we can have self-sufficiency? So absolutely yes, but these things do take a lot of time, right? And in an economy or nation's time scale, a few years don't really matter, right? We need to be taking the right steps. As long as we are looking at it in a holistic way, I think this should be a good opportunity for us to reorient trade with China, get what is needed and discard what is not. The earlier part of the question, you said, will we get distracted? See, we have always lived in a difficult neighborhood, as you know. We have some difficult neighbors who keep getting more difficult as time progresses. One would imagine that these countries would probably behave, and there are many such examples across the world where disputes have been resolved over a period of time. Somehow it has not happened. And therefore, we will have to keep spending on defense. And again, we have to use that strategic lens, communication, IT services, for example. These are critical. And India is gradually attaining critical mass. So there is no running away from the need on spending on defense, on raising our Atmanirbharta in strategic sectors. And therefore, we will continue to up our ante on that. And maybe this China example is a good reminder for us to get our act together. We have, just mulled over it and just meandered and then not paid enough attention. And maybe some of these incidences on the border or some of the things that they are doing in the Security Council or some other places is a good reminder for us to get our act together. And I'm sure as we look back, maybe a decade from now, this would definitely have been a turning point. And we would be thanking probably the Chinese for what they've been doing to us over the last couple of years or the last decade or so.
So they egged us to get better and we got better. That's the way we'll thank them. Yeah, fantastic. Coming to the third question that I have is about the Indian rupee, right? It's now become weaker over time, 80 rupees plus. And what do you see as a trajectory of this? Last year has been pretty, dismal, if you say, in terms of the Indian rupee.
So I think one thing that we should not forget when we talk about rupee is that it's a ratio, right? It is expressed in terms of another currency, and it is the dollar typically, because most of our trade is denominated in dollars. So what happens to the dollar also matters a lot to the rupee. So I'll just give you a perspective on looking at the rupee performance in 2022. If you look at the dollar, it went up significantly, it appreciated significantly in double digits. And there are times in economic history when the dollar has suddenly moved up dramatically vis-a-vis all currencies in the world. And if that happens, there is no way other than the rupee to really have depreciated, right? So that is one part of the equation. If you look at that, the rupee has depreciated in, say, single digits or thereabout, 9.5%, depending on when you take as the starting point, whether you're taking 1st Jan or the first day of the fiscal year, right? So there are many ways of looking at it. But basically, the distinction I'm drawing is the rupee has depreciated just about under, say, double digits, whereas the dollar has appreciated in say, early teens, that sort of a performance. But if you now look at rupee without the dollar into the equation, you look at rupee vis-a-vis any other currency, the rupee is actually done very well. It has appreciated, right? Now, that is a remarkable story. And we began this by saying that how resilient the Indian economic performance was. If you had looked at India's history, rupee history, any such episode of global turmoil, when FIIs take away $32-33 billion in a short span of time, when there is a war, when oil goes to 138 or thereabout, the rupee has always depreciated dramatically. This time, it has not been so. So rupee is held very strong. And another way to look at it is in real terms, the rupee is fairly valued. So I think we have done very well. The rupee has done very well so far. Going forward, I think the key determinants of any currency fundamentally are your growth differential, right? So if India is going to grow at 6% from 7%, but the world is going to grow at, say, just about 1% or 0%, that growth differential matters a lot. That is number one. Second is the inflation differential. When was the last time we saw inflation in the US being so high vis-a-vis the inflation rate in India, right? So Economics 101 tells you that inflation, if domestic inflation is higher by, say, 5% vis-a-vis US, our currency should depreciate by 5% or similar magnitude, right? But this time around, it is the US which is facing a higher inflation, but yet its currency is appreciating instead of depreciating, right? So I think we are in a very, very interesting sort of a phase, which I mentioned earlier. And looking at the rupee's performance in that perspective gives us a lot of confidence that even in the coming year, the rupee is going to hold its own. And I do think the growth differential, the interest rate differential, despite the current account deficit that we have, which is elevated, the rupee will be in a comfortable sort of a range, 82 to 84 sort of a range, which is not a disaster, right? I mean, we have seen several such phases where rupees tanked 12, 13, 14% in a short span of time. I don't see that happening, even though our current account deficit is elevated. Just yesterday, some numbers were released for the quarter Q2, and the current account is at 4.4%. I think that is going to narrow. Going forward, crude oil prices will matter. The direction of war in Ukraine is going to matter. And even with all those imponderables, I think the rupee is going to be in that 82, 84 sort of a range.
So do you think this has happened through sheer luck and serendipity, or because of the policies of the government?
No, so I think serendipity is one. Yes, crude oil, as you've seen, went to 138 and then went back to 85 levels. So there's been a lot of volatility there. But I think a lot of credit is to the fundamentals of the economy, right? Like I mentioned, India's growth differential vis-a-vis the US or the world at large has remained very, very high. So I'll give you an example. if I compare across time periods, India's growth differential with the rest of the world was about 4.8 or 4.9% in the heydays of 2004 to 2008. And when I look at it now, I'm talking about averages, even with a slowing GDP growth rate, India's growth differential is going to be as high, 4.6 or 4.7% vis-a-vis the rest of the world, which is fantastic. Second, we have done a lot of work, and the RBI and the MPC should also get that credit. We have, for the first time now, hard-coded in legislation that the RBI is going to be responsible for containing inflation, right? Earlier, the inflation bit was always out of hand. It got out of hand because of the current account or some supply shock, whether it is oil or food. But this time around, we have legislated that if inflation goes beyond that band of 4% plus 2 or minus 2, the RBI will have to raise rates and bring it down. So I think we will not have those scenarios that we've had in the past, where inflation ran amok and you could do nothing. So I think that is another fundamental feature that has changed. And we have undertaken multiple reforms. We have been relatively responsible, even in the wake of the worst crisis in 100 years, which was the pandemic, right? And something like a war. We have fiscally been responsible. So I think these three factors should get greater credit than, say, luck or serendipity, which of course does play its role in any cycle.
Yeah, every time you do need luck, but you also need to do the hard work, and which I think you say that we have done. Very good. I'm going to jump one question and come back to the number 4 later. Since I'm from the IT industry, and Mahindra is part of the IT industry through its subsidiary. IT industry seems to have lost its sheen, right? In terms of the stocks doing, and every company is declared, and it's a question of time, right? With the Googles and everybody sacking people, it's a question of time that the tsunami will come to our shores in terms of business and all that. Do you think? Do you see a bounce back, or if so, when? And when do you think we'll be? And what do you think are the prospects of IT over the next decade?
So I think you're right. There has been a kind of yo-yo in the fortunes of the IT industry, right? So as we went through, the world went through the worst crisis in 100 years, na bhuto na bhavishyati sort of a crisis, right? The pandemic. You saw IT really booming. A lot of these services and some of these things boomed. And thereafter, as the recession fears, or as the Federal Reserve started raising rates dramatically and beyond people's expectations, the industry has suffered a setback with capital drying up, right? So a lot of activity, incremental activity happens on the back of finance, cheaper finance, and that suddenly has dried up, and it will get harder for people to get access to capital. And what it does is, like I mentioned, 2/3 of the world economy is either going to slow or go into a recession some point in time in 2023. And that really has brought a lot of pressure on the IT sector. But I think one good way of looking at things, we always look back, right? If you look at this industry, the performance, every 5-6 years, the world has gone through a global sort of a shock or a disaster. So whether it was the global financial crisis, the dot-com bust, every decade or every 6-7 years, the Brexit and all of those, right? So if you look at the world at large, every 7-8 years, there has been a major global crisis, and yet the industry has been able to bounce back. So that is one, looking at history. The other is pure economic or financial common sense. What typically happens is, if you are slowing down, you're looking at growth slowing down, you would want higher productivity, right? You would not want to jeopardize your competitiveness. And if that is your, say, perspective, you would want more technology, the better sort of technology than the opposite of that, right? And therefore, it also makes eminent economic or financial sense for the CEOs or the economies at large to be able to spend more and not less. So yes, I'm not saying that these cyclical issues will not plague the industry, but looking at it via the lens of history, looking at it via the lens of economic common sense, and also, I mean, offshoring is going to be, and look at it, India is already the office of the world. And we're now, while trying to become the factory of the world, but I think there is enough evidence over the last few years or over the last few decades that offshoring or investments in these sectors to become more competitive have only gone up. And if you need to do that, if that is the imperative, you will have to spend more. So I have absolutely no doubt that the industry is going to get shaken up a little bit because of these cyclical issues, but will bounce back. And there is going to be a digital transformation globally as we speak. Domestically also, this economy, I mean, the 3 odd trillion plus economy is going to get morph into a $5 trillion, $10 trillion economy. If you want to do that, the domestic size of the pie opportunity size is humongous, right? So we are doing multiple things, India Stack, and a lot of these things are getting financialized. We are trying to get more competitive. So I think there is going to be a great, prospect of huge domestic demand as well. So I have absolutely no doubt that going forward, there are compelling reasons for the world and the domestic economy, which is going to get much larger and become a sizable global magnet, to be spending more on IT. So there are multiple numbers on outsourcing, etc. Right? A lot of studies say that by 2030, the outsourcing or the offshoring spend could be about $500 odd billion, if I remember correct, from 170, $180 billion currently, right? So I have absolutely no doubt that the industry is going to bounce back. But yes, the aggressive tightening from the Fed and the growth shock across the world will have some impact in the near term.
So, ladies and gentlemen, you heard that, youngsters, that IT coming into the IT industry, jobs will be there. You will have some issues in the interim, but overall the jobs will be there. So not to worry is what our chief economist Shukla ji is saying. Coming back to a question on ESG, we have about 5-7 minutes more before we wind up. ESG is hot topic, right? Everybody wants to do ESG and, wants companies to do the green thing. And you talked about it at the beginning in one of the questions you answered. How do you think this is going to get, how are we going to motivate companies or enforce companies to do more of ESG? Because companies are driven by shareholders who want EBITDA. So how do you think this is going to happen?
So I think there is a greater realization across the society, the political economy, and the corporate minds that this is something that has to be done. And it makes some eminent sense. So if you are looking at it from the prism of, say, shareholders, I think anything that is going to add value to shareholders is going to get looked at seriously by the corporate, the boards and the senior executives. I think there is enough evidence now that if you look at ESG, look at adopting. So while heads of state and the world at large keeps making commitments, I think from a corporate perspective, what is important, from a board perspective, shareholder perspective, what is important is there is enough evidence now that this will lead to reduction in costs. So it makes financial sense, right? So if I'm shifting from the mindset of, say, short-term costs, but it is also going to add value from a long-term investment perspective, right? So don't look at it just from the perspective of some cost saving on energy or water or waste and stuff like that. It is going to make eminent long-term sense. So look at it as an investment. And I think boards and shareholders are beginning to realize that. It is going to help you in price negotiations. It is going to impact valuations and future proofs your growth, right? And one important point, as funding dries up, I think it is going to give companies that are on the path of sustainability or the goals that people have spoken about or taken up, you will get better interest rates, right? So a lot of these, so I'm not talking about the activist shareholders and those sort of people, but I think people at large are beginning to realize, the investor community, banks, central banks, RBI has put up a committee on the need to look at this and how do you finance sustainable investments. And if one does that, it is going to bring down your costs, it is going to bring down interest rates. And if one does not do so, there will be a point in time when these markets for funding will be shut on irresponsible companies or companies that are going to destroy the environment. So I think it makes eminent sense from a corporate perspective to be able to really partner governments and multilateral agencies on the path to ESG or a sustainable planet, sustainable future.
Yeah. And, I had asked this question of the managing director of Mahindra and Mahindra, Anisha, that, this dichotomy between shareholder pulling you and, ESG pulling. And he had said, a very common sense answer he gave that many years ago, we were debating between higher production or better quality, and we had to do both. And in the last decade also, IT companies especially have been debating between more growth or profitability, right? And we did both. So I guess we'll do both. And, you're giving some indicators on how this can happen. And we further mentioned in the beginning that India's growth perhaps should be on the direction of green growth and blue growth rather than wanton growth, right? So, and I'll come to the final question with that, which is my favorite, which is about, since it's about young professionals, helping them become better versions of themselves. Final word, your advice to young professionals coming into the market. What skills should they focus on? What specialization? Specialization, I'm saying, is IT the big thing, continuing to be the big thing, largest employer? Or should they get into some other mindset, manufacturing mindset, or, tourism mindset, because Swachh Bharat, etc. So that's the direction of my question. Skills, specialization.
Okay. So I think I'll take an indirect route and then try to give a slightly indirect answer using my economist hat. So I'll just give you a short story. There is a boy that goes to a fair and sees this balloon seller, right? Multiple balloons, blue, red, yellow, green, and of different sizes and shapes. And he asks his parents, which balloon is going to fly higher, right? The blue one or the red one, the large one or the small one? And the father says, the color does not really influence how high the balloon is going to fly. What matters, what will take it higher or propel it higher, is what's inside the balloon, right? And what I mean by this is, the world is going to change dramatically at breakneck speed. It's very difficult for us to fathom sitting here right now, trying to understand what the job market will look like 10, 20 years from now. Look at, for example, two things in 2022, which I thought for me personally were dramatic. I would have never imagined. So ChatGPT and DAL-E2, right? So basically you can write songs, essays, jokes, research papers, coding, fractal answers, ChatGPT, right? I would have never been able to imagine something like that when I was a student or starting out, nor I can imagine somebody who was trying to dispense advice on some of these things to be able to answer those. So I think just like the father answered, what really matters is what's inside you. Are you adaptable? Are you going to be agile, right? Do you have the ability to keep learning, upskilling? Do you have it in you to focus on what really matters? Health, right? And that focus at large, I think that is something which is normally not within the ambit of hard skills. But I think there is enough history, industrial revolution till now, or the evolution of mankind. It is what is inside us, human beings, which propels us further and faster. So, I mean, some things that I can tell you from a common sense perspective, you do have a power to make a difference, right? You may not always be noticed or celebrated or whatever, but I think you do have a power to make a difference if you are at it using some of the things inside you, right? And also, I think one very important thing that I can say now at this age and stage is, remember, each one of you are a time billionaire. I mean, all of us fail to realize the importance of time when you're younger, right? And you just spend it on things that are not required. So treat time as your ultimate professional currency, right? And all the billionaires that you admire in the corporate world or in your life, they would be happy to trade their billions for the time that you have. Each one of them, almost everybody. I cannot imagine a person who will not do that. So please remember your time billionaires, and you can engineer serendipity. So I don't know what technology, like I said, chat GPT or what comes up next. But if you stay agile, adaptable, and remain a student, don't let that student inside you go into inertia. It's not that you come out of university with brilliant qualifications and that's the end of the world. You have to keep learning, remain a student, so that your surface area of serendipity is large enough, so when the opportunity arrives, you're able to pivot to the next technology or the next big thing in life. And therefore, I think you have the ability to engineer serendipity. Just be curious, be adaptable, and remain a student.